You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, welcome to This Week in Futures Options, the program where, as the name implies, we break down the week that was and indeed still is from a futures options trading, trending, and all sorts of other fun perspectives here on the old show. My name is Mark Longo from the optionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Whoa, my co-host there is losing his mind there with the... Whoa, are you okay there, Mr. Nick? Are you alive?
Yeah, I thought I heard Sean scream out in the background, and I laughed and swallowed something and then coughed.
You did. Okay, we'll get to all that in a second, of course. I'm glad to hear you are alive, sir. Of course, you guys can join us live every Friday at 1:30 p.m. Central, 2:30 p.m. Eastern. Via Mixlr, MIXLR. You can always stream the archives, download the show as well via the website, theoptionsinsider.com, or over there at CME Group. Maybe we'll get it up at FTSE Russell one of these days as well, or via our mobile app or your iTunes, your Pocket Cast, all that good stuff as well. If you sound a little bit different, it's because I'm still coming to you from the southern studio here, at least for another couple more weeks. So looking at the sky, just got a little dark. I don't know what it is, but whenever I hit the button for TWIFO, the sky gets overcast down here. Maybe the Skype gods, the technology gods are sending us a signal here. They frown upon TWIFO. But whatever it is, listen live, hit us up, questions, comments, insights. We do love to hear from you guys. And joining me on the program here, first off, we have confirmation of life, so that is a good thing. I'm joined by Mr. Nick Howard, the founder of Bantix Technologies and creator of a little program we like to use around here called Quick Strike. Mr. Nick, welcome back to the show. How you doing over there, sir?
Hey, I'm doing all right. I can, if I give me 30 extra seconds today to talk about something that we talked about the other day. If the big news that I was trying to announce over the last 4 weeks was the OPEC watch tool that CME released this week. So it got a lot of play, especially with the meeting today. So maybe we could talk about that a little bit later. But so far, so good.
Was something
today.
going on with OPEC this week? I must have missed it,
Yeah.
sir. I've been busy here in the southern studio. I didn't realize there was something to do with OPEC. Okay, we can get to that forthwith. Let me also introduce my other cohorts. We're beaming in from all over. Mr. Nick actually is the only one adjacent to or near to the Chicago studio. We also got my other compatriot here, Mr. Sean Smith, the managing director of derivatives licensing over there at FTSE Russell. Easy for me to say. Sean, welcome back to the show, sir.
Thanks. It's good to be here. I'm in New York City. You know, today's Recon Day here with the Russell indices. So we're very excited here, and we've got record volumes expected to exchange hands on Recon Day here in New York.
Yeah, you're in the Mecca there. You're in the belly of the beast for all things Recon. Let's get into it, because I know you got a lot of things going on Recon Day, and you got to hop off to them in a little bit. But let's get into it. People probably heard us last couple of weeks talking about this Reconstitution thing. Like, what the heck? What's the big deal? Why is it such a big deal? Well, I'll tell you why it's such a big deal here. Looking at the numbers-wise, this Reconstitution can be, and often is, the most active equity day in terms of volume any year. I mean, in fact, looking at the numbers here, by the way, what is it? We talked about it a little bit last week. Russell 1000 and 2000 basically get reconstituted. It's a market cap weighted index, member listeners. So they take the top 3,000 names by market cap and break it down. Top 1,000 go into the Russell 1000. The bottom 2,000 go into the Russell 2000. That's pretty much it, right, Sean? I got it. That's not much more advanced than that, right?
You're taking all my thunder. What do you ask the question, then you answer the question. You're good.
I've done this once or twice, but yeah, that's pretty much people who are confused by the process. That's pretty much it, right, Sean?
That's the process, but there's a lot of stuff, a lot of nuances within this Reconstitution that are pretty exciting kind of statistics that I think you guys would all be really interested in. That is the total U.S. equity market recap. The Russell 3000 is up 13%. That's $27 trillion, up to $30.7 trillion this year. I mean, it's massive. The Russell 1 by itself is up 13%. The market cap is at $28.2 trillion of market cap. The Russell 2000 is up almost 10% at $2.5 trillion. So we're talking, $9 trillion in fund assets utilize the Russell index, right? So it's a big day for those investing in the indices.
Yeah, serious volume going up here. I was looking at some data points myself, sir, going over the Reconstitution. Let's see. Last year, June 23rd was Reconstitution Day. It saw nearly 5 billion shares changing hands. That was the second busiest volume day of the year, listeners. So if people wonder why that's a big deal, that's a big deal volume-wise in terms of actual recap. It only happens once a year there, listeners. So something to pay attention to. Worth noting as well, about 10% of that money is managed or controlled by passive index funds. So they have to kind of rebalance whenever these types of changes go up. Some names that are probably going to be having a little bit of activity as a result of this, getting some shifts around. Apple people like Apple, Microsoft, Softy getting some love as well. But JP Morgan, Grubhub actually gonna be a big one as they switch out. Some names will actually have grown so much in market cap, like a Grubhub, they're gonna move from the 2,000 to the 1,000. It's gonna drive a lot of paper in those two as a result, as funds rebalance and they adjust their holdings as a result. Sean mentioned the numbers that are actually benchmarked to this, and given the fact that passive indexing is all the rage these days, those numbers are pretty impressive. Back in 2016, let's go back 2 years, we saw that took place on the 24th Reconstitution of that year. That year, we saw 6.7 billion shares change hands. That was 3x the typical ADV, and it was the largest volume day actually of the last 3 years. So this can actually move some numbers here, Sean. What are you guys seeing so far, kind of as the day is kind of halfway through here? What are you guys seeing anecdotally as you're out there in the belly of the beast, Sean?
The majority of these shares to exchange hands were at the closing bell. So, it's a busy day on the stock exchanges. I don't have the real-time data in front of me. Unfortunately, I'm calling remote from a cell phone. But it's the exchanges themselves are both expecting record volumes today, like all-time record volumes.
Well, there you go. If you've been kind of wringing your hands saying, start of summer, not much going on, here's a little event to kick some life into your trading out here. I mentioned Apple. We don't talk about Apple too much on Twifo. Get a chance to talk about it here with all this reconstitution. It has been buying back a lot of its own shares, which has actually reduced its market cap. So they're going to reduce its weighting in the 2,000. They're thinking about an estimated 2.5 to 3 million shares going to be for sale on Apple at the close. Like Sean mentioned, a lot of this stuff going up at the close. So we'll see a lot of action as stocks have balances to buy, balances to sell. Apple's such an active name; it's only about 10% of its ADV, so people aren't thinking it's going to really crush the stock price. But some names that trade a little bit less, if they have big balances to go on the close, we could see some big moves. They're estimating about 800 different individual equities are going to trade a day, more than a full day's volume at or near the close as a result of this, and about 150 of them will need to buy or sell. Get ready for this. More than 10 days worth of volume, listeners, at the close. So that's why Sean can't really say the numbers now. We don't know it really till the close. But a good one, like I mentioned before, Grubhub, that's one that's gone from 43 to 113 over the past year. So as a result, it's going to move to the Russell 1000 from the Russell 2000. Going to see volume of about 3.8 million shares going up today. That's about 3 times its typical ADV. So interesting stuff as a result. We've also seen, big movements and big developments out there in the broad Russell indices. We've all seen this week was kind of a crazy week for volatility, broad equity volatility. We saw, S&P vol kind of get bid up as a result of the trade war, kind of coming off a little bit today. We saw a similar thing going on with RVX, which is, of course, the Russell VIX, the Russell volatility. In fact, coming into this morning, it was pushing 17. It was right about 3.5 handles higher than where it was this time last week. So quite a bit more. VIX at the time was about 14.5 or so about almost 2.5 points higher than the VIX itself, and 3.5 points higher than where it was last week. It's come off a bit, obviously, since then, since we've seen vol coming in a little bit today. But again, another interesting data point for people out there who are always looking and saying, where can I look for some vol, for some activity, for some action out there when it comes to all things Russell. Speaking of action, interesting one on the Russell 2000 E-mini options over there at CME. As you might imagine, this was an active week for them. We're going to see more action coming up, but about open interest up another 17.5% this week, with the lion's share of that coming in the July contracts out there, about a little less than a third, about 31% coming in out there. There's in the weeklies, the week 3 in July, listeners. Again, the weeklies, when you're talking equities, it's all about the weeklies. And looking here where it was in the week 3 in July, listeners, Russell index right now flirting with Russell 2000, flirting with 1,700. But that's not what people were trading this week, at least coming into the options. It was our number one with a bullet. Actually, I take that back. It was 2 puts. Number one with a bullet, slightly edging it out. We're actually out there in the August contracts. It was the August monthly contract, August week 3 actually, with 1520 puts lighting it up this week, doing number one, followed hot on its heels like a 40 contract difference by the week 3 July 1400 puts. So, Mr. Nick, kind of a weird one. We got far out of the money puts lighting it up in Russell on a week when vol was kind of up, the index, at least on net on the week, up on the week. So a weird one. Anything catching your eye out here in Russell land or perhaps in broad equity land, Mr. Nick, as we're seeing a lot of stuff going on with reconstitution time today, sir?
First thing, like the weeklies, for some clarification, in the indexes, they turned all the serial contracts into weekly contracts. So when you see like an August or an October week 3, that's really the third Friday, which is basically the previously
the monthly,
the monthly, right? So that's the one thing that when you start seeing the R1s and R2s within the front, R1, R2, R4, those are sort of considered what was the standard weeklies before. They changed it just to make it sort of, they had an expiration every Friday, so they switched it to just weeklies in general. But, classically, the week 3 is the regular monthly expiration. So anyway, that's just for people who are interested in why there are so many weeklies out there. You get your regular quarterlies, and then you're going to get these weeklies that are out there. And Sean just texted me he's got to hang up. So thanks, Sean. We'll talk to you. Talk to you next week, and I'm doing better than texting him. I'm telling him on there now.
Sean, before you go,
you're going live. I gotta hang up. Yeah, I'm headed to recon here. So
any last tidbits, any last thoughts, takeaways you want to leave our listeners with about reconstitution before you hop off, sir?
Just very quickly, our exchanges, NASDAQ and NYSE, do a tremendous job of facilitating this transaction in a real seamless way. Not without really causing any hiccups in volatility or other problems. Their systems are tremendous, and they've done just a great job of being able to handle this flow on the close. So I just wanted to compliment them on this big day for us. So we're very excited about it. But that's about it. I just wanted to say I got to jump, and I apologize for that.
See you, Sean.
Glad you could join us, sir. Get back to the belly of the beast. Mr. Nick, you were saying there about Russell volatility and equity volatility. What's catching your eye, sir?
Yeah, no. So after, is there anything really catching my eye? Well, vol is definitely up, but we are down a little bit. So we're going to slide up the curve. So that's going to be some of what's happening, but we are seeing a definite shift in the curve as well. So there is an increase in volatility. I think probably the most noticeable thing is the skew itself from last week really looks like it's pushing more towards the regular kind of equity sloping of the skew. So, if I go take a look and I got the minis up too. Let me pull the minis up as well so I can really do a good comparison against each other. You're starting to see where it's not quite as crazy on the put side as it is on the S&P, but we're definitely a much bigger shift. So we have the puts in general pretty much look about 5% more rich than they were last week, and the calls are offered by as much. So we're definitely seeing a move, and that's for everything that's probably 30 days in. So it's a little bit skewed from a standpoint that those shorter dated ones might see a bigger move in that direction. But all the puts are more expensive, and all the calls are a little bit more offered. So little bit of a move toward the regular or the more S&P oriented vol slope for the skew. Still not quite as skewed to the puts and the calls in the indexes. It's really tilted. And frankly, I should look at some history when you start to, if you want to talk about the S&Ps at all, we could look at some history and see how wide that's looking like it's approaching some widths that are probably near historical highs in terms of the difference between the calls and the puts. And I would imagine that if I took a quick look at Russell 30-day consummatory or 60-day consummatory volatilities, that there'd be a good chance that that skew is probably as wide as it's been since we started covering them. And let me take a look at that.
I can vamp for you for a little bit here while we pull that up. Actually, I wanted to pull up some of the E-minis today as well to see kind of what's going on out there in our old friend, the E-mini S&P. By the way, listeners, you guys can follow along yourself. CMEgroup.com/TWIFO, TWIFO. If you did that, you too could see what Nick and I are looking at right now on the reports. And as you pull up over there, head on over to the equities. And then we were just talking Russell 2000. I'll switch it over to the E-mini S&P 500, and you'll see pretty much what we're talking about here. Again, the story with all things equities is going to be in the weeklies, by the way. The E-mini off about 20 handles net on the week here, so a little bit of a sell-off net on the week. We saw a big tumultuous week for equity volatility in the indices as the trade war was on again, off again, on again. Not as bad as we thought, worse than we thought. A lot of that going on here in the belly of the beast. Right now about 27.65 or so out there in the S&P. And number one with the bullet, as Nick was talking about, skew has been kind of wonky lately. The puts were lighting it up. And actually the number one trade out here this week is one that actually is a little bit surprising. Here we are talking about weeklies all the time. It wasn't weeklies. It was the Dees 16 half puts. So you're talking, about 110 handles or so out of the money. Dees 2018 16 half put, number one with the bullet, 34,000 of those lighting it up this week here, listeners. Let's see how they broke down throughout the week. The lion's share coming, about half of that coming on Monday, listeners, 17,000, then 7,000 Tuesday and Wednesday, 1,500 or so on Thursday, and a one lot lighting it up today. So, yeah, 34,000, about 33,000 of that opening on the week, listeners. So, Mr. Nick, I would not have picked that, but then, when you're talking about the skew being kind of wonky, that kind of makes some sense. People are piling into longer-term, far-out-of-the-money puts, and that's impacting the skew. Is that enough time, Mr. Nick, for you to do your cursory skew analysis?
Yeah, well, I was done when you started talking, but that's okay.
Okay, I like to vamp sometimes.
So, let's see. Okay, hold on a second. So now I lost track of myself here, so let me continue one more time. No, so I'm looking, and we're kind of limited. We're kind of limited in our time stamp here, so I'm going all the way back to October. And we had one kind of spike up in June, and I think that might just probably been a bad interpolation on this. But when we look at that, when we look at where the puts are and where the calls are over the last 9 months, we are seeing that they are definitely at the peak of their widths and separation between each other. So we have the puts as of yesterday about 20%. This is 20% rich to the at the money, and the calls about 12% cheap to the at the money. And we're seeing them even cheaper today. So we're definitely, as you mentioned, that big trade, more than likely, or those types of trades are happening when the people it looks like people might be getting squeamish, and now they're starting to go way out there, which is going to drag, right? You start buying stuff way out on the delta range, you're going to start pulling that curve up and up more, right? It's going to keep dragging that curve up and up and more. So we're going to see a bigger and bigger tilt. Pretty soon it's going to be like a vertical asymptote pretty soon, where it's just negative call delta and infinity put delta. How about that?
Ooh, negative asymptote. Look at you, sir. Pulling out the $10 words here.
The vertical asymptote. The vertical asymptote, not a negative asymptote. So
I said vertical.
Anyway,
didn't I say that? I said vertical. Okay, well there we go.
So we might get corrected by some of our smarter listeners. So we'll see what happens.
All right. Since we touched on it, and again, we got to wait for a lot of this Russell stuff to play out around the close. So keep an eye for all of our live listeners. Something to keep an eye on as we get into the close. Gonna be some size volumes on some of these names. I can't remember the last time we talked to Apple on TWIFO, Nick. So there you go, listeners who are diehard equity heads. There's your fill. As we move on, the other big story this week, Mr. Nick, you kind of touched on it, alluded to at the top of the show, is a little group called OPEC. They tend to have a little bit of say in what goes on in crude, just a little bit, And there was a bit of a debate going into this week on exactly what they were going to do. Ahead of the meeting, we were seeing some concerns about whether these production increases were going to go through. Remember, we've seen disturbances in areas like Iran, disturbances in Venezuela. That's kind of hurting some output in some other areas. And so people are agreeing that maybe OPEC needs to pick up their production a little bit just to offset the output limitations coming out of those areas. And so they did. They announced a deal today. But it's kind of weird. They didn't really announce what the deal was. You kind of have to read through the tea leaves a little bit. It seems like most of the analysts who follow this stuff saying that OPEC pretty much agreed to add somewhere around 600 to 800,000 barrels a day. Again, that's going to effectively lean on prices a little bit. And we saw prices declining coming into yesterday, and then today, of course, seeing a different story. Net on the week here, if I can pull it up again, head on over to the energies section of Quick Strike listeners to do this for yourself. You'll see net on the week, crude out there in WTI actually up about 3.5 handles, 68.5 right now out there in crude land. Vol, of course, as with any big event risk type event, everyone was waiting for the OPEC announcement, and when it came out today, Vol taking a drubbing, also compounded by the fact that we're up on the weeks. That's also going to hit the vol. So kind of a 1-2 punch, seeing vol off over a point across the board, 1.5, 2 points in some of the contracts. So a nice drubbing in terms of, I think that's a technical term, right, Nick? A vol drubbing.
Yeah, I'm kind of, I'll mention again, the CME released a OPEC watch tool, and it's basically a way to try to use what the market volatility is saying and give a little bit of an idea of, based on what the market makers and the speculators are doing in the options, give an idea of which way they think the OPEC decision is going to go and which way it might drive the market. So keep an eye on that. I know that it's here in past. You can go to cmegroup.com/OPEC watch, all one word, and you can see that tool, and you'll recognize that it probably looks a lot like the Fed watch tool. That was sort of the point, a simple way to make the information available without having to think too much. But it's all based on what the market's telling us. There's not really anything speculative in there. It's purely using market data and volatility information, and putting some bar charts out there that are easy to read and easy to talk about. But anyway, one thing I guess that's sort of a little bit confusing was, they're going to increase production, but then we were trading. We're up $3 on the almost $4 on the week, and $3 today. So I'm not sure. I'm not sure if it was softer because they thought they were going to increase production. I'm not sure how that works, right? They said they're going to increase production a little bit, which would mean that prices would go down a little bit, and that's why they were down. But is it because they didn't say they would increase by more than what they said that the prices are up? I just, sometimes I just don't get what we're supposed to get from these announcements, because it's certainly, to me, is counter to what I expected.
Yeah,
given what they were saying. It does
kind of fly in the face of basic economics, does it not? You have more supply, that price should come down, right? All other things being equal. Clearly, other things weren't equal. Clearly, the market was maybe predicting a more drastic increase than they ended up getting. Maybe they're predicting 1 million barrels a day. I don't know. I had the same reaction you did when I first saw that news. I said, wow, first off, this announcement is kind of vague and mysterious. And then B, the market's rallying off an increase in supply. What a strange thing. My old Econ 101 professor would have probably stroked his chin at that and said, I guess that's why they call it the dismal science, Nick.
Yeah, I don't know. I mean, I try, because the risk you run is you make statements based on what you think's going to be, but then you end up having to range your statements. Maybe we should learn from Citibank and Goldman Sachs and just make really, really wide predictions in what we expect.
As you recall, last week I did that. I said crude will be between 35 and 100 through the end of this year. So
right. So you're
a pretty
right
bold
on the money.
Prediction on my part.
Right. So I'll go and predict that we'll be between 60 and 75 for the extended till the next meeting. So how about that? I'm even tighter.
Look at you. Carping me on both sides. How dare you, sir?
I did carp you pretty good on that one. But as far as anything interesting, obviously, the vol being down and the futures up, that's going to be tied a little bit to the movement within the vol curve itself. But vol is off, that's for sure. And then Not a huge change in what quick skew or the skew looks like. Puts are still expensive at the money. Calls are still cheap. Puts are a little bit more expensive. Calls are a little bit more cheap. But that again is probably playing into where the movement in the vol curve, like going from a puttish strike into a callish strike. That's probably a lot of the reason for that change in that number. But probably most surprising of anything on TWIFO is let's see, total amount. So it's the fact that open interest this week of all weeks, it's not a huge upswing in open interest this week, right? It looks like only 3.5%. I don't think anything expired today that was a big deal. So, was July trading today? I kind of forget now if July went off today. I don't think it did, because that would have played into the OPEC watch tool. So so that would be the only thing that's really, that OI did not increase all that much this week, especially given what was going on in the market with the news. And I'm going to look at last week just to see if it's kind of an offset to this week. Yeah, last week was up 7.5%. This week was up only 3.5%. So that's probably the one thing that's most interesting here, outside of the kind of the little bit of a higher move up than I would have expected just based on the announcement. But I guess when they don't really say anything, people can build into that whatever they want. So what do we usually say on Friday? That this market will say that we'll expect the thing to kind of taper off again a little bit, maybe. And then let's just go on both sides of the coin. If the market tapers off, then vol will get crushed even more. If the market goes up and we kind of start hitting the 70 strike again, maybe we'll see it pick up again. But I would be surprised if we went too far higher before we kind of settle back into this 60s range for the next couple of weeks anyway.
That would seem to be the case, but again, today's activity is a bit of a head scratcher, so you never know. They're threatening to almost threaten my range, Nick, of 35 to 100. How dare they? My very, very daring prediction for the rest of 2018. Looking at the numbers here, listeners, if you could say we closed out the week right around, like I mentioned, up 3.5 handles, right around 68.5. So you might think maybe a 65 handle put or call would be number one with a bullet, and you'd be close, but not quite on the mark. It was the AUG 60 puts, so seemingly very distant puts now, particularly given today's move, leading the charge to this week with about 24,500 on the tape. Lion's share actually going up today, 12,000 coming out on the heels of the number. The rest about 3,000 a day the rest of the week. And net about 2,500 open interest, but again, we don't know today's OI change. That could make a big change to that. Number two is what you probably would expect. Actually, maybe not. A little bit out of the money here. 70 calls, lighting it up to the tune. Again, in AUG, most of the action in the AUG this week, about 55% of it in that AUG contract. 21,000 contracts going up. Again, about half of that volume today, about 10,000. So the event driving the paper kind of as we expected. The rest kind of scattered throughout the week. Again, OI numbers kind of misleading because we don't know today's, but about 1,100 contracts net opening on the week. Then we drop down some more puts to 65 puts, 19.5 for our number three number. Again, about 11,000 going up today, making it the big number. So today is kind of where the action was, as you might expect. Listeners, number four, 62 puts, so a nice little hefty put strip there. 18,000 and change, about 10,000 going up today. And a 63 put, 17,000 going up with about 8,500 today. So you got a nice little put strip there. You got the 60 puts number one, followed by the 65 puts, 62 puts, 63 puts, and 64 puts. So if you wanted that nice 60 to 65 put strip in AUG there, the market obliged you today. Let's look out really quickly to see if anything else outside of that nice little juicy put strip was traded in August. 75 calls in D's, pretty active, about 7,000 contracts going up. 50 puts also rearing their ugly heads out there in, what do we got here? If I could hit the right strike. There we go. In March was lighting it up to the tune of about 2,000 contracts. So it wasn't all near term. It was farther out and a little bit farther down. And also worth noting, July 2019, 61 halves lighting it up today, 2,700 this week, I should say. And if that's not far enough out or far enough up for you, We got the Dees 2019 par call, so right on the outside of my range, Nick. 2,500 of those trading this week, as well as the 45 puts in Dees 2020, doing about 2,000 this week. So kind of weird stuff all across the board. Interesting stuff as well. I'm looking at your OPEC watch tool, Mr. Nick. It is pretty cool. It's right. It's pretty straightforward. It kind of just shows you a nice little bar graph, and bam, you could see, or a nice little chart. You can see exactly what the predictions are coming out of the numbers, coming out of the options. Pretty interesting stuff. We got our next meeting, in November, so I guess we'll be using that tool again soon. But check it out if you haven't, cmegroup.com/OPEC or OPEC Watch. What is it, Nick?
cmegroup.com/OPEC Watch. And yes, not predictions, probably not a good word to use. It is an analysis of probabilities of given the current market's implied volatility, right? So where there's no human speculation part to that. It's just purely market numbers and then looking at the probabilities and then putting those together for people to see.
It's pretty much what the market is prognosticating by actual data, which we all know is the best. If you're going to prognosticate, it's the best way to do it. It's where actual money is actually changing hands. That's the best way to do it, as opposed to some analyst recommendation or whisper number or anything like that. Where actual money is trading is always going to be the best analysis for you. A lot of things are lighting it up, Mr. Nick, this week. I think we should hit on, we've been talking a lot, so we talked the big stuff afoot with equities, big stuff afoot for oil this week as well. Also big stuff going on this week. Yet again, got to bring ags back to the conversation for like the third time in like 3 weeks, Mr. Nick. It's kind of a new trend for us here, ag talk here on TWIFO, but they've been lighting it up again. We saw the beans in particular, as we said before, China, a huge consumer of our soybean exports. We saw soybean prices just taking it on the chin, dropping to a 9-year low, coming off the heels of all this rejuvenated trade war talk. We saw the July futures dropping about 7%. Let's see how they finished out the week here. Again, cmegroup.com/TWIFO to find for yourself. Click on the ag section, then click on soybeans. You can see exactly where we're looking. The soybeans finishing up right around the 900 level, off about 10 handles. That's pretty much about 1,000 handles lower than where we were talking about them when the Acuna guys were on, Nick, not that long ago. So soybeans have been taking it on the chin. They were off another, again, about 1% net on the week here, listeners. And, of course, all this continued kerfuffle, downside, spark and vol out here, up about a point to sometimes 3.5 points, depending on where you're looking out here on the term structure. We've said it before, the liquidity in these names is usually centered around some of the seasonal rotation of the crops. So you're not going to see front month lighting it up as often in the ag. You see others, and that was the case again this week out here in soybeans, with the Nove contract lighting it up, doing nearly half of the volume this week. Open interest up pretty strong this week as well, up nearly 9%. So a pretty active week, as you might imagine here for the beans. I said we finished out the week right around the 900 even level. Let's see what was number one with the bullet out here. If you said it was these Nove 1100 calls, you would be correct. That was number one with a bullet out here. Kind of an interesting strike and month, given everything that's been going on out here. A lot of this paper going up earlier in the week, about 18, almost 19,000 contracts on the tape. Actually pretty evenly split between Monday, Tuesday, and Wednesday, almost 5,000 contracts each of those days. Net about 6, almost 7,000 closing. So maybe not surprising, people who had a more optimistic outlook for soybean prices were perhaps disheartened this week, deciding to get while the getting was perhaps not good, but not as bad as it could have been, getting out earlier this week. Number two, the 1,000, the par calls. Going up here, about 16.5 contracts net. The big day actually on Monday again, 7,500, so almost half going up on Monday. The rest kind of evenly spread throughout the week. About 6,000 contracts net opening on those par calls. Then we drop to the 1,200. So, again, a little call strip here in Nove. About 13.5 going up this week. The big days, Tuesday and Wednesday, almost 5,000, 6,000 contracts, respectively, there. Not too much going up today. About 3,000 contracts net closing here on the 1,200 calls to see if any puts were lighting it up. And, yes, there were. Actually, I missed one, and we got to go back a little bit because this would actually take the number 3 spot. It was out there in here. What do we got here? In an AUG contract, actually. It was the AUG 880 put, so a little bit more in line with where we finished up here on the week. Not that far out of the money put here. with about 15,000 of these bad boys lighting it up here. The AUG contract getting most of this number 2 for volume here with about 36% in the AUG expiration contract going up this week of the OI. 36% of it, easy for me to say, going up in August. And of that, number 1 with the bullet, the AUG 880 and 900 puts doing about 15,000 contracts each, a few hundred contracts separating the two of them. The lion's share of the 880 puts coming on Tuesday with about 11,000 and change, and the lion's share of the 900 puts coming on Monday with about 7,500 and change, both slightly opening on the week. So a lot of back and forth churn and burn. Not surprising given the fact that that's kind of pretty much near at the money puts at this point. So Nick, Ags making it on the show for a third time, actually pretty much a whole month going now at this point, because a lot of action out there, particularly in the beans. Now, we talked bean skew before. It's kind of an interesting thing to watch. It has its own kind of life, its own evolution. Anything catching your eye out there in the soybeans vol or skew this week, sir?
Well, I just was looking at the history of these, and they've been lower. They were this low last summer around the same time. They're still not approaching like 5-year lows. It was around the 850 range that we saw way back then. But I guess probably what I find, and I'm going to look at the November contract mostly because I think that's the one that I think is the old crop. Well, that's the new crop coming out there, right? So I'm going to look at Nov. And we see the puts, they were, what's interesting is last week they were cheaper than they are today, and the calls were more expensive than they were last week. So, or the calls are cheaper than they were last week. So kind of a little bit of a slumping, a little bit of a bid in the puts and a little bit of slumping of the calls. And that would make sense given that it's just been a constant, kind of today's change there. Today we're up, we're down for the week, so we have some movement up. But I would think that just looking at this range and looking at the levels and looking at the fact that the puts have a little bit of a bid back in them, and again, not knowing much about the beans and not really, I'm not even going to try to talk tariffs and how they affect the bean prices, because what makes sense to me, just given with the oil and all that kind of stuff, I must be missing something with the tariffs too. So I'm not even going to embarrass myself and try to even make any statements of what should happen, because it looks like it goes down if that happens, but who knows, I could be wrong. But I would say that, you hear me talk about, getting in at the bottom of a range. We're at 910. We were probably lower still earlier in the day even. And it would seem to me that I don't know, something's wrong with this chart. Seems wrong to me. It says I'm up on the day. Are you seeing that as being up on the day but down for the week? Is it up on the day?
You talking the beans here?
Yeah. No, the beans are up on the day, right?
It shows me down on the week and down 10 handles on the day here.
No. I think let me see what today says. No, today they're
down
up
10 handles on the week. Excuse me,
down on the week, right, and up on the day, right. Yes. So so we approached our we didn't quite get to the lows that we've seen before, but I would say just based on looking at how the curve has turned a little bit, that you can continue to be bearish if you want to, but even if the thing would continue to go down, you still get a bigger vol pop. So I'm going to do my classic gold trade here and say I like buying puts and hedging them, because if we keep going down, you're going to win on the volatility, and if we go up, we're going to go up. We have a lot of room to go up, so you're going to get some money back on your delta. So even with the vols being up from where they were, so this seems like a good place to start trading options if you ask me, just based on what the vols look like and how the curve has shifted a little bit.
A good place to be trading options. It would also be nice to have some options right now in the crypto, sir, because those things are moving and shaking. I'm looking at it right now. The CME Bitcoin futures off another 500 handles and change, threatening to break through the 6,000 level to the 6180. Just ticked down, 6175 right now. So continuing to trend down. Doing some good paper today, as you might imagine. Looks like 3,800. So you're talking nearly 20,000 contracts, or coins, I should say, when you really factor in the multiplier there of 5x. That's a pretty beefy contract. So today, an interesting day for Crude. It's been an interesting couple of weeks for Crude, Mr. Nick. The same guy who came out, the same professor who came out alleging some shady dealings in the VIX settlement, recently came out with a similar thoughts when it came out to Bitcoin. He said the coin, I believe it was Tether, was the one that was being used to pretty much manipulate that run-up we saw into the end of 2019. And I'm sure a lot of those concerns are part of what's just feeding this protracted sell-off out here. We all know once the futures listed and people had an actual way to sell the contract, we saw a nice protracted sell-off in the crypto and has never really threatened that 20,000 level in Bitcoin ever since. But still interesting stuff. Have you been paying attention to all this crypto protracted sell-off here of late, Mr. Nick?
Yeah, I mean, I don't watch every minute of every day, but I mean, I do watch and look for the drops, and I did see the Tether article as well. I'm also watching my portfolio of longs as they continue to go down, but still, I still like certain ones. This seems, I mean, these levels at least seem reasonable for people to be getting back in for the bigger coins, right? I mean, the Litecoin's down quite a bit. The Ripple is down where you have missed it before, so you might want to get your account open and buy it finally. So
yes, my delays have worked out in my favor, sir.
Yeah, I mean, they've traded down to $0.50 again. So, I mean, as far as the volatility is concerned in that stuff, let's just take a look at what the actuals look like here. I mean, we still didn't have a really big. I mean, we had a jump this month in the historical volatility just over the last week because of these big moves. But it's still kind of we had our big high volatilities in December and January, and in the beginning of February. But we've been fairly steady. We're outside of one standard deviation of volatility over the course of the year. So we were outside the lower boundary of a single standard deviation. So we had hit a kind of a lull point in vol there. But I think it's reached a point where you just I don't know about you, but it just doesn't seem there's the chatter's not there like it was before. And there's still a lot of stuff going on. Coinbase is opening in Chicago, right? So that's a big deal. But it's feeling more like a commodity of sorts where people are used to it, and there's not the same craze as it was before, and it should be probably credited to the futures that's happening. So it'll be really interesting if anybody decides to do options. Now it's going to be, I think it'll be a pretty reasonable market, especially given if it has these decent ranges, but they're not crazy ranges where people are afraid to get their face ripped off if something does happen.
Yeah, interesting stuff. I would still like to see those options out there. So get on it, SIBO and CME and everybody else, and get us some crypto options so we could start talking them on the show, which would be really nice. Meanwhile, speaking of things to talk about on the show, let's get some of your questions. It's time for a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to the Futures Options Feedback. Like the man said, this is the portion of the show where you guys take the reins, questions, comments, insights. You know how to hit us up on the website, on all the social medias, on the Mixlr chat. However you want to listen to the show, hit us up. Questions, comments, insights, all that good stuff. We do like to hear from you guys. Let's kick it off with a nice basic one from Tim Kessler. He wants to know, quite frankly, do you need a futures account if you just want to trade options on futures, you don't want to mess around with those pesky futures contracts, the underlying. You just want to trade the options on the futures. Do you need a futures account? Well, unfortunately, Tim, for you, I don't know if you have a broker. Because you think about it, you're selling puts on these things, you're buying calls. The chances are you may, even if you don't want to, may be forced to interact with the underlying in some way, shape, or form. So in which case, most brokers are going to require, again, I'm hard pressed to think of any that would allow you to trade options on an underlying that you don't have an account for. That would be an interesting thing. So yeah, luckily these days it's such a streamlined process compared to what it was even a few years ago. Used to be you had to contact them, you had to reach out to fill out a bunch of usually in paper documents and then kind of fax it to them. It was a huge pain. Most brokers, even your basic retail equity options brokers now have really streamlined that process. You click over to another tab, you say, hey, I want to open a futures account too. They say, okay, click on this, read the statement, digitally sign this, bam, bam, bam. Maybe you wait for approval for a little while, maybe not. Usually that process is streamlined too, because a lot of brokers want you trading these things now. So thankfully that process has been streamlined. They will usually merge both of those accounts behind a similar UI, so you can't even tell really that you have separate accounts going. It seems like one account, and it's interesting stuff. Mr. Nick, are you chopping down trees over there? What's going on?
No, I'm just thinking of ways I can contribute when you're ready for me. That's all. I have my. That's right. You can't mute me because you're remote.
I cannot
right?
mute you, sir. I can hear every little thing going on in your studio over there.
I'm just tapping my iPad so I can.
It sounds like you were chopping down trees in the forest. What do you have to say to our friend, Mr. Tim?
No, I don't know if I can add anything other than that. Like you said, I think it's pretty easy to do. You don't want to trade the underlying. I would think that you'd probably want to stay away from that underlying futures as much as you can and do the options. But I don't have any brokerage experience and what they expect. I just know what I can do and what I can't do. So open one up and see what they say.
There you go.
More than likely, you'll be fine.
Say, I only want the options. Please don't let me get the futures. Let's see what they say. But yeah, you're going to need something that at least is approved for the underlying so you could trade the options on said underlying. All right. Let's see here. Nicholas, going back to what I was talking about before here. Mr. Nick, he says, you guys have thoughts on the reports from the VIX, the VIX-rigging prof. I like that. That someone propped up the price of Bitcoin last year. You guys buying what he's selling. This is kind of what I was just alluding to, Nick, that report coming out of that professor in Texas. I don't have his name offhand, but saying that effectively some outlet, I forgot which one it was, issued this coin called Tether. And effectively, if you trace the trades in this Tether, they tend to correspond with the dips in Bitcoin. So whenever Bitcoin was dipping, they would issue Tether and use that to buy more Bitcoin. And that was at least his allegations. And as a result, he thinks we saw this long kind of journey spiraling upward to about 20,000 in Bitcoin by the end of the year before all these other products came online and added a lot more liquidity to the space. We kind of just touched on this. Nick, any other thoughts? Nicholas wants to know, have you read this report? Are you familiar with what's going on there?
I have not read the report. Any kind of price fixing stuff, I always feel like that's so elaborate and far-fetched that I have a hard time believing that that's happening. But again, there's so many far-fetched and crazy things happening right now. You can't discount it entirely, but I don't know. I have a hard time with that kind of stuff, but maybe, I don't know. Maybe they did.
Yeah,
maybe they didn't.
This professor clearly saw he got a nice pop out of his allegations about the VIX, so maybe if he made similar allegations about a similarly widely held and traded name, he can get a little bit more interest. So you always got to take these things with a grain of salt, and academics don't have the deepest insight into the actual functional mechanics of how these things trade sometimes, so they could sometimes misinterpret legitimate activity as otherwise. But again, this is interesting. I haven't had a chance to really do the analysis for myself and look at what the trades were in Tether, so I'm kind of looking at this all secondhand right now. But it's interesting stuff, and again, these aren't the same kind of markets we pay as much attention to day in, day out because there are no options on them. So we have to kind of take them at some of their word, some of these fragmented venues of what they're putting up and what some of the intent behind these trades were. But there does seem to be a little bit of smoke there, kind of like there is with VIX. There's smoke there, and whether it's to the extent of the manipulation allegations everyone is alluding to, that remains an open question. But there's definitely enough smoke to want to peer behind the curtain a little bit farther. Let's see. We got a lot of crypto questions here, Mr. Nick. Bellat wants to know what do we think of crypto vol at these levels, particularly Bitcoin? Are you guys doing? And it also wants to know, second part, maybe we'll start there. Are you guys doing any trading, even though there aren't really any true options available yet? Well, I know, and Nick, you've dabbled into a lot of the underlying. I think you have Litecoin and Ripple. You've been trying to get me to the dark side of Ripple. I haven't had a chance. I've been busy. I'm in the Southern studio. I haven't opened my Kraken account yet to get the Ripple, but I probably will dip my toes into some of those pretty soon. But I don't have any underlying yet. And you're right. One of the reasons I don't is because there are no options. I usually prefer to trade the options as opposed to the underlying. Go figure. Options Insider is the name after all. So the lack of options has kind of stymied a bit. But I do want to see what the experience you guys are having on the retail end trying to execute these trades as well. So there's some information to be gleaned there, just trading the underlying and seeing what you guys have to go through on Coinbase and on Kraken and some of these other outlets to see kind of what you guys are doing here. And we've been hearing about it anecdotally. It's good to see for ourselves. Mr. Nick, let's start with the second part. I know you have some Litecoin and some Ripple. Anything else in your you're slinging around over there? And then you kind of touched on it earlier. But any thoughts in addition on Bitcoin vol here?
No, like I said, I think over the last few weeks we've mentioned how the volatility is just not there really. I mean, you're seeing the movements, but long term the volatility has flattened out. With the different measures that we had in terms of the 15-minute bars and the 60-minute bars versus the 1 day change. It's really sort of steady. So as much as you get this big drop, prior to the big drop that we had today, we were kind of moving around in a pretty normal price action. Normal for what we expect in the Bitcoin. So I think you can go in here and quick strike and look at what we speculate the Bitcoin volatility is, but until there's an actual, you can go in Deribit too and look and see what they're doing in terms of volatility. But you go look in Deribit, the vol's not that high either when you're looking at the 30-day contracts and stuff like that. So I think that personally, I don't think there's any value to the cryptos if they fluctuate so greatly that you're afraid to buy them or afraid to sell them, right? So anybody, back when it was going so high, why would you ever use them from a purchasing power standpoint? Because you're afraid you like the guy who did the $2 million pizza or something that they talk about, right? He used Bitcoin to buy a pizza and it cost $2 million. So with it trading within a range, now it can be something that's used from a safe and secure transaction, and easier than a store of value like gold because it can be electronically transferred and stuff like that. So I see it being pretty steady, and the steadier it is, the more apt you are to see options get introduced, because I don't think they want to put that product into an environment where the underlying is so crazy that nobody will even make markets, right? If it's too nuts, nobody's going to make markets because they're going to be too wide and nobody's going to trade on them. So, when you have something that's a little bit more controllable and you have the futures that have a little bit more liquidity and you can get your hedges off, and there's enough of a history of charting so you could see some trends and that type of thing, then it makes more sense. But I think we have a pretty subdued volatility in the Bitcoin, even with these. We're not seeing these big run one way or another. We're just kind of seeing a movement into a range or dropping out of a range or lower part of a range and trading again. So it's pretty steady. If anybody wants a chart, they can just tweet me and I'll send out what I have for the different ways that we measure it. I have no problem doing that.
Yep, volatility kind of like candy. A little bit fun, it's sweet, it's delicious, it's a good thing. You get too much and has all sorts of negative effects. And yeah, we've seen a little bit of that in Bitcoin. We shall see when we get the options finally listed how that volatility holds up, or if there's more shoes to drop. It's been a weird time, because Nick, we saw the crypto especially Bitcoin getting some of the blessing from the SEC, and yet that's not enough to stem the red out there as all the other things kind of overcoming all that. Unfortunately, listeners, that music means we've come to the end of amazing how fast this hour flies by in TWIFO, talking big stuff afoot in the equities. Keep an eye on that Russell Reconstitution. Can easily be the biggest volume day, not just of the year, but of multiple years. So keep an eye on that one. We'll talk about the impact of that more on the show next week. Also seeing a lot going on in the ags as this trade war, will they, won't they, continues. We're also going to see a lot more going on with OPEC. We can probably sink our teeth into what the heck was actually driving this rally today. Kind of a bit of a head scratcher as to why we're rallying so hard. We'll dive deep into more of that next week. But unfortunately, let's go back around the horn. Let's check in. Nick, you just talked about the about the cool OPEC watch tool. Check it out, listeners. It is pretty cool to see very clearly what the market is pricing in terms of volatility and driving some prognostication from that. What else you guys got up your sleeve over there at Quick Strike, Mr. Nick?
Well, I've been alluding to it for a while. I mean, we'll be releasing some volatility tools in the near term in the next 2 or 3 weeks, and that will allow people to see over 10 years of historical charts and different stuff that we talk about on the show: quick skew, regular, risk reversal skew, butterfly, all that kind of stuff. Futures, realized volatilities, constant maturity for futures, constant maturity for options, rolling front future, realized volatilities, all kinds of stuff. So there'll be data from 2007 forward. You'll be able to see them on charts. You'll be able to do ad hoc exports that you can be able to purchase for a small fee, and you'll be able to subscribe to the entirety and then get stuff ongoing every day via an API. So there's some really good historical volatility tools that are going to be available very soon. So just keep listening, and we'll fill you in as they get closer to release.
There you go. Get your ad hoc, get your bite-sized data. You maybe want to download it, take it with you, do some analysis on the fly. Head on over to bantix.com, BANTIX.com, to sign up for all that good stuff. If you're listening to this show, you've seen how useful Quick Strike can be. So add it to your arsenal. What are you waiting for us for? Head on over bantix.com and do it for yourself. Of course, you can always check out our friends at CME. They got the futures now at the CME Institute for a lot of these great questions you guys send us. You can hit them up over there as well. And as always, see a nice little free preview of the Quick Strike tools at cmegroup.com/Twifo. And if you got more questions about what the heck's going on with this crazy reconstitution, why does it drive so much paper, what are some of the impacts on things like volatility and other things, head on over to FTSE Russell, FTSE Russell.com, 2 S's, 2 L's, and you can learn more about all that good stuff. And on behalf of Sean and Nick and our friends over there at CME, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, all the fun stuff you guys do to check out Twifo every week. We love you, and we'll see you next week for more of This Week in Futures Options.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.